So they've only been considered investments for what, call it 50 years. And prior to that, gold and silver were money. Gold and silver were the foundation to the world's financial markets.
Hello again, everyone, and welcome to another edition of Silver Bullion Television, SBTV. I'm your host, Patrick Vierra, part of the outreach team of Silver Bullion here in Singapore, where we want to help you truly secure your wealth. Bill Holter joins us today. Bill was a stockbroker for some 23 years and the branch manager for 12. He has since retired, but continues helping people as a precious metals expert and broker. And we're delighted to have Bill Holter join us once again today. It's time to saddle up and silver up for Bill Holter. Bill, welcome back to SBTV. How are you doing?
Good. Thank you for having me back, Patrick.
Glad to have you back on. It's been a while and the world is quickly changing, and we're even seeing movement with both silver and gold. What, in your opinion, is starting to move the needle, bringing a bit of volatility to both metals?
Well, I think it's probably supply oriented. Um, we've seen a premium in Shanghai of $30 to $50 an ounce over COMEX and LBMA for the last, I don't know, 4, 5, 6 months, and it's a clean arbitrage. So what's happening is inventory is moving from west to east, and I think that's finally beginning to really tighten the supply in the west. And if demand even stays the same and supply shrinks, you'll see higher prices. So I think that's what you're seeing is the arbitrage is finally starting to take effect. You've seen a rally over the last month or 2 months. You've got gold now at what, 2150 or thereabouts. It's a clear breakout. Wouldn't surprise me if we traded back down to 2070, 2080, test the breakout level and then take off. Um, but yeah, I think you're already seeing that.
Okay, yeah, that's pretty interesting because last time we saw gold do well, we saw companies sell off their gold assets to pay down accumulated debt, notably due to higher interest rates. And we aren't really seeing that this time around yet. Therefore, should gold comfortably hold that $2,000 plus mark, as you stated here, do you think silver will see this as confirmation and begin an upward turn as well?
Yeah, once this gets rolling, silver is going to be gold on steroids. I do want to add one thing. We've seen over the last probably 6 months, and even longer actually, we've seen uh, the amount of gold supposedly held by GLD, by some of the ETFs. We've seen their position shrink. It's continually shrunk. And it's my opinion, if you read the prospectuses on a lot of these ETFs, they don't have to hold physical gold. They claim to hold X amount of ounces. My question is, are they real ounces or are they synthetic ounces? And my thought process is they understand what's going on behind the scenes. And I think what you're seeing is a closeout, if you will, of some of the games that they were playing, and that has affected the inventories of some of these ETFs. They're starting to dry up. So, I don't have any direct evidence of that, but my sniffer tells me that a lot of this gold is synthetic, and as they're unwinding some OTC positions, the long side obviously has to go also. So whether the long side is real or whether it's synthetic, I'm not 100% positive, but I suspect, as is everything else in the world today, I think the inventory numbers for years have been fabricated.
You think the same is with silver? I mean, considering, let's say, in China with the solar panel production, solar paste, all of these, green types of energy, silver is is very highly in demand. Do you think we're going to see that same with silver, where the actual physical is going to be drained out of the exchanges, and people holding ETFs, they may find that there may not be that physical backing?
Right. I think that I've said that all along that failure to deliver or failure to exist uh, will create a problem similar to or even greater than what happened in the nickel market 2 years ago. So, I mean, you could wake up one day, and if you remember what happened with nickel, it was up over 100% in less than 2 days trading. So, yeah, I do think that that's likely. You mentioned solar demand. The Silver Institute just came out with numbers of 1.2 billion ounces of demand, and the supply we know is just a shade under a billion ounces per year. So that's showing a deficit. But I think the Silver Institute numbers are way incorrect because there was well over 300 million ounces used just in solar. So, if you add in the other uses and investment demand for silver, I suspect the deficit is way more than 300 million ounces.
All right. Speaking of deficits, well, U.S. is still going further and further in debt, and we have a FOMC meeting coming up. What's your outlook for the next FOMC? What do you think Powell and gang are going to be doing?
Well, obviously, they've talked about cutting rates and they've pushed it off. Now they're talking maybe June, could be later than that, could be September. Uh, I personally believe that there's going to be some type of a negative event which will force them to cut rates. That will smoke the dollar. And at some point in time, in my mind, the Fed is going to have to raise rates to protect the dollar. They either raise rates or they lose the dollar.
I mean, if you don't mind sharing, what range of events do you see possibly coming down?
Oh, no, that's a crazy question. In today's world, uh, and let's add in the fact that this is an election year, and the polls really look like Biden and the left are going to get absolutely smoked. And it's my opinion that there's less than a 50-50 chance that there's even going to be an election because I don't think they have the ability to cheat enough to retain power. So out of fear of uh, jail time, there's going to be some type of more than likely a false flag man-made event. When you're asking me, what could it be? Throw a dart at 100 dots and whatever dot the dart lands on. I mean, who knows? But there's just so many potentials out there at this point to break the system. I would never speculate as to what the event will be, and it may be more than one.
A few days back, Treasury Secretary Janet Yellen, she said she regrets describing inflation in 2021 as transitory. And the term several Federal Reserve and the current administration officials used to describe the pandemic induced price surges they initially thought would be temporary. Bill, was inflation ever going to be temporary?
No, I mean obviously prices moved because there were supply chain problems. But basically, inflation is a monetary event. And when you print trillions of dollars and when you borrow trillions of dollars, you're creating excess demand. So you're creating more demand than there would normally be for whatever the limited supply of whatever goods you're talking about happens to be. Um, I mean, she used the term transitory, which was, like you said, suggesting that it was going to be temporary. And she regrets using the word transitory. I mean, she should basically have come out and said one of two things. Either I was wrong or I lied, one or the other.
If you're enjoying this interview with Bill Holter and I, please consider subscribing to our YouTube channel. And if you're looking for price exposure to gold, silver, and platinum while being fully backed by physical gold, silver, and platinum with some of the lowest prices around, I'd like to invite you to take a look at Silver Bullion's product, Stargrams. Go to www.silverbullion.com.sg, go to the Precious Metals tab, and click on Stargrams. Well, I don't think there's going to be a good chance with either of those. But having said that, I need to ask this question: why does it seem as time goes by that we see less and less truth coming from our leaders, our media? I mean, there's always been less than truths, half truths, but we're down to minuscule decimal truths at best nowadays.
Yeah, and we're at the point of outright blatant lies. And I mean, the answer to that is very simple. They have to. Think about this. Once you lie, you've got to lie again to cover up your lie. And you've got to lie again and again and again and again. And those lies have got to get bigger and bigger. And that's what's happened. The lies have gotten so big as to no longer, they're, the lies are no longer credible. The lies are so obvious that the average Joe Sixpack in the street can see that they're being lied to. Uh, so in order to support the narrative that they put out, which is obviously incorrect. In order to support that, they've got to lie, and they've got to lie bigger and bigger. And here we are. Everything's a lie.
Yeah, Bill, it pains me to say this, but do you think the US is headed down that road of being basically a banana republic?
Oh, without a doubt. Uh, a banana republic is defined in two ways. One, and this goes back to when I was in school or getting out of school, 30, 40 years ago. A banana republic back in the 80s and 90s was any country that got to the point where they had 100% debt to GDP ratio. The US right now is 130% debt to GDP. So from a mathematical standpoint, we're already at that definition. And the sad thing is the dollar is the world's reserve currency. So you have a banana republic that's issuing the currency. Then on the other side, the other part of a definition for a banana republic is when the rule of law breaks down. And I mean, you can't go an hour or 2 hours without reading, more and more uh, bullshit as far as arrests, indictments, etc. The rule of law is broken down, and the current administration is using the Department of Justice as a battering ram. They're using it as a weapon.
I want to share something with you and get your thoughts on this. From Gerald Salente's Trends Journal, the number of US banks showing problems soared from 8 to 52 in last year's final 3 months, the sharpest spike since the three banks failed in rapid succession back in March of 2023. The Federal Deposit Insurance Corporation, or FDIC, had reported this. The banks in trouble are small and mid sized institutions. The FDIC said it does not want to name the individual banks that are ailing. Bill, when you hear this, what are your thoughts?
Well, first off, what the narrative is, what they're trying to say is that the big banks are healthy and it's the smaller banks that are having a problem. And obviously, and this is related to coming out with a central bank digital currency, it would be way easier to do a CBDC with only, say, 5, 10, 15 big banks and everything else folded up under those big banks. If you try to do a CBDC with 5 or 10,000 various banks out there, it's like trying to herd cats. You can't do it. So, um, that said, they're telling you that the big banks are healthy and it's the smaller banks that are not. And that's not the case. If you look at the numbers, I think, what is it? Four banks have over $4 trillion in commercial real estate exposure. Now, why are their loans any better than the loans on a smaller bank? They're not. And on top of that, you've got, huge derivatives within the big banks that the small banks don't have. So in my opinion, the small banks are nowhere near as much in trouble as the big banks. But that's not what we're being told. That's not what the narrative is.
You brought up a great point about this elimination or consolidation of the smaller banks to potentially usher in that CBDC. What's the latest you're hearing with central bank digital currencies?
Well, I've not heard too much recently, but that is obviously the plan because they want to be able to control, monitor everything that you do. They want to be able to shut you off. I mean, if we're in a CBDC and you and I are doing this interview, if you've got U.S. bank accounts, they're probably going to be shut off. I'll be shut off. I mean, that's the way they roll.
So much disasters, and I mean, real disasters brewing in the US. Is the country, the dollar being overstretched? Is it overreaching to a point where, well, the dollar, its influence is starting to tear?
Well, yeah, it certainly has become overstretched, but understand this is the plan, the plan to tank the United States. With the United States gone, then the globalists can basically do what they want if the U.S. is no longer leading the West. So just understand that we're being driven off into a ditch on purpose. And I mean, back in 2007, when I first started writing, I saw a lot of the policies that were being put in place. And my comment back then is the same as it is now. The policies are too stupid to not be a plan. They have to be the plan. No one would do these things. Oh, and Patrick, let me just mention one other thing. We're talking about the small banks and the big banks. How about the biggest bank, the Federal Reserve? I mean, they lost $114 billion last year, and I believe their equity was 65 billion. So you've got the central bank of the United States, which issues the world's reserve currency, technically insolvent because their balance sheet now is upside down. And it's the same with the ECB. It's the same with the Bank of Japan. It's the same with Bank of England. I mean, across the board, the central banks have watched as they raised rates. They've watched their balance sheet basically implode into insolvency because the bonds that they hold have lost so much value. And just this morning, the Bank of Japan raised rates for the first time in what 17 years since 2007. I mean, they have propped up real estate. They have propped up the ETFs, the stock market, and now they're saying that they're no longer going to do that. If I was a Japanese investor, I would have sold everything already, but this morning I probably wouldn't have been long in the first place. But if I had a portfolio of real estate, a portfolio of stocks, I'd be out of everything because the biggest buyer just said they're walking away.
Right. And I think even with the US selling treasuries, China has been letting treasuries go, Japan has been letting treasuries go. I mean, but besides emerging markets, I mean, who really is going to be buying treasuries to fund the government?
The Federal Reserve, the buyer of last resort, or the buyer of only resort.
You mentioned CBDCs. Um, the dollar is waning. Countries are de-dollarizing, trying to get away from the dollar, and we have central banks looking to introduce CBDCs. So the question I want to ask here is: will we see a new reserve currency, world reserve currency, or are we just really going to switch to a one world type of currency with it being central bank digital currencies?
I think they want to have a one world currency. I mean, there's obviously I don't think the BRICS want one world currency. I think the BRICS, well, all they really want is free and fair settlement in trade. They want to trade something real for a currency that has some real backing to it. Uh, in the U.S., I do believe I believe the dollar is going to fail, and that we will get a CBDC, and that will probably be forced by some type of really negative event. Markets are collapsing, uh, markets, banks, etc., actually close, and they'll say, "Well, we can fix it with a central bank digital currency." People will be begging for help. They'll accept the CBDC, and I really don't believe that the man-made reset is going to last more than, I don't know, a couple months, maybe 6 months at the most, because you're swapping a fiat currency for another fiat currency, but that second fiat currency is outright evil because everything that you do can be tracked, and I think there will be pushback, and I think that the onset of the initial CBDC is not going to work. When they bring a CBDC forth in the United States, I don't think it's going to be successful. I think there'll be huge pushback, and there will be an ultimate reset by Mother Nature. And when I say Mother Nature, all assets versus all assets. And what, at that point in time, that's when you will see absolute huge demand for gold, huge demand for silver, with very, very little product available for sale. It may even go no offer. It may go into hiding. Um, but people are going to understand when the world around them is defaulting, they want their capital in the two things, the two monies that can't default, gold and silver.
For quite some time, gold has been considered an investment, and it's done quite well. But is gold also a sort of money insurance for all the things that we are discussing here?
They've only been considered an investment since 1976, once Americans by law were allowed to buy gold and buy silver again and hold the physical metal. So they've only been considered investments for what? 45, call it 50 years. And prior to that, gold and silver were money. Gold and silver were the foundation to the world's financial markets. And that changed in 1971 when the US went off the gold standard. And then in 1973, when the petrodollar was created, you had a foundation that was based on US Treasury bonds, paper promises. So the foundation has been hollowed out because those bonds are issued by a bankrupt entity that at some point in time is not is not going to be able to pay, or the markets are going to have to be flooded with dollars in order to make those bonds payable. When I say they're not an investment, uh, the reason you want to own gold, or the reason you want to own silver, is because they cannot default in a world that is defaulting. And when people ask me, well, how much should I put into gold or silver, or gold and silver? And my standard answer is whatever you don't want to lose, because no matter where you have it, in any type of paper contract or any type of situation where you have an intermediary between you and your money, there's going to be bankruptcies all over the place, and you're going to lose your capital, and you can't that can't happen with gold and silver because they cannot default.
And when we talk to some of the financial people, they recommend 10% of your portfolio in gold. But you're saying here, whatever you don't want to lose, that you should be putting into precious metals. So that would be probably a more prudent thing to do.
Well, yeah, I mean, if you look around and you can see that the world is more indebted now than it's ever been on any ratio, any way you want to measure it, the world is more indebted. They've raised interest rates that causes more stress, that causes uh, more probability, or it causes more probability of default. And the whole system And again, we're not even talking about derivatives. So when we add in derivatives of 2 quadrillion, now you're talking about uh, the gaming table is bigger than the assets on the planet. So uh, just understand that in a system that is bankrupting, you want your capital in something that cannot bankrupt.
Bill Holter, before we head out, can you tell us how people can either follow you or know about more of your work?
Sure. Just about a year ago, I opened up my own website. It's simple, billholter.com. I did recently change my business email. You can contact me through the site. There is a contact icon there. Or if you want to contact me directly, my business email is bholter@proton.me.
All right, Bill Holter, I want to thank you for your time. I hope we can do this again fairly soon. I mean, things are unfolding pretty quickly. But again, thank you, and let's meet up again.
Sure. Thanks for having me, Patrick.
That was precious metals expert Bill Holter sharing his views on the economy and precious metals. To follow more of Bill's views, go to billholter.com. If you like this video, please do subscribe, hit the thumbs up button, and share. All are greatly appreciated. Audio only versions of this interview can be found on iTunes and Spotify.